Hi everyone, and welcome to this update from CABA Capital. So, the first quarter of the year started off really strong for our funds, CABA Flex, CABA Flex 2 and CABA Hedge. They delivered solid returns of 3, 5 and 5.6% respectively. But April came in with a bit of a reality check. Just 1 week in, we saw the biggest spread widening since the Swedish real estate turbulence back in May 2023. And now is a time of opportunities. So, what happened? Basically, the equity market started sliding after President Trump introduced his Liberation Day tariff package. That drop spilled over into the credit markets, and even though Scandinavian covered bonds are AAA rated, they weren't spared. The spread between covered bonds and government bonds widened, and that's why we saw a drop in the fund values. Now, here's the silver lining. Wider spreads mean higher expected returns going forward. Let me zoom in on CABA Flex 2 for a second. The price took a sharp drop, but here's the thing. The expected price at maturity hasn't changed, so the concept is working just as intended. Higher spreads now mean better expected returns later, and as the fund matures, the risk naturally declines. In other words, this might be a great time for new investors to consider stepping in. The future is hard to predict, especially with Trump back in the mix, but we remain confident. Our focus is still on high-quality, AAA-rated covered bonds, and with spreads now at higher levels, we see increased return potential across all our funds. Thanks for watching and have a great day.